Good morning. Here we are live and we have the futures market. This particular one is called the E-mini S&P 500 at 5:28 a.m. Pacific Standard Time. Throughout the morning you can see how the futures were breaking out. You can see the price action behavior. You can see the consolidation between the early morning buyer and seller, and then how that buyer just got control, went to the tops, but then there were reversals and retest the breakouts this morning in the E-mini futures. The part in the price action is a common denominator between the pre-market buyer and the pre-market seller. There is a bid and ask and a behavior pattern. Price action behavior patterns carry open the bid, so they open the bid and then they drop the bid and then they raise the ask and then they sell, buy it on the ask and then they sell down below the bid. That is a cash market that is actually working right now between those two parties. So the same behavior that you see now, and the market will open in 1 hour and 1 minute. And this will be the truth of it. We are going to have major economic data coming out right now. And what we want you to watch is what is going to be the response. You just seen that big fat green bar? That's the knee-jerk reaction right now on the economic data. We got breaking news. That's the PPI. That's the jobless claims. It's going down now. You can see that knee-jerk live here right now on economic data. Economic data. Okay? Every Thursday we get the same numbers that come out. And you can see that knee-jerk reaction right up to the upside, which is going to even create more of a gap open in prices. We will understand that this market and that this pre-market futures event, that's going down right now. We can show you clearly, MMT, that the thing that you always want to see is the degree of that breakout through those resistance lines and how that knee-jerk reaction brought that right back up to that 1226 handle on that E-mini S&P knee-jerk live reaction going down. It's here. It's now. How to trade economic data. Dow futures up 109 as far as that goes. Right now, you've got continuing claims. You've got the excitement of the economic data playing out. You can see where that buyer and that seller, it's live. It went right up. They slid that bid right there. And this is that knee-jerk reaction on headline data. What we want to do, Empire State Index at 9.53, that hit the date. So you got a 20 handle move in the NASDAQ 100 futures, and we'll go over that in the next segment. But we can just show you how they are running together in that knee jerk. So let's take a look at your E-minis right here. And that's upper resistance line. But let's just take a look at 12. Let's just take a look at today, pre-market. We can see in pre-market the behavior. We can see that, unlike just like the other, that we had these support. We had these ascending breakouts. Okay, and we did until they broke, and then they put in their highs across here. This is that behavior in the morning. You can see that clearly. One of the things that you're going to want to watch is how the reaction to the economic data plays out live between that opening data, economic indicators. Thursday, we have 4 of them that are going to be out. We'll talk about it in another segment. However, this will be part of the same behavior that you will have intraday to the upside of the market versus that short side markdown that we had yesterday. One of the things, though, is how long will that short squeeze go into that opening cash bell That's going to be, it's right now 5:33 a.m. So you had a full 3-minute knee-jerk reaction. That's that favorable buy side. You can see that's what your NASDAQ 100 E-mini is doing. Back over here with this one, you're selling right at the top, right slightly after that knee-jerk reaction using economic indicators, gauging the buyer and the seller in less than an hour on that opening print, that cash market print, long and short, calls and puts, sentiment. And what you have here is the same carryover and the same kind of common denominator in price action between buyer and seller that will start the opening cash market bell today. Today's date, a wonderful day, 12/15/2011, 5:34. You can clearly see the behaviors right here and how they're, focusing on the U.S. and all of a sudden Europe has left us. Remember one thing, MMTs, we will be selling into resistance levels. If there's a markdown in the tape, it would show where all of a sudden that the changes would be the sellers would take over at least 8-1. Then you know your put side's paying all day. Vice versa. We can mark up the futures as we are, and we're going to mark down the put side that made the biggest moves yesterday, like right here, Google, 630 puts, 635s. Oh, they're all going to come back down. They made a high yesterday. They marked them up 630. And with these gaps, all that premium's going to go bye-bye. Bottom line. And the other thing, that 395 put right here, that we had cashed it all in. Why? Price volatility, markup volatility at the extreme higher. So if I go up a delta and I fell, I look at getting short. Where that reversal will come in, right now, this type of buy and sell side behavior will carry over in the opening bell, pre-market, futures. Once again, they're going to mark down this side of the market, and what they're going to do over here on the call side, they got on sale at 210. They marked them down 540. They're going to mark them up. And how are they going to do that? Right over here, they're going to mark up that 625. That got down to $1.05. They marked that thing down and that's what happens. And when you're buying wholesale, 8,100 of those contracts, they're going to mark these up in value. And the thing about it is, if this gap on Google was only 8,600 shares, remember, it's where they're going to sell into that upper resistance level. And how do you know? There's only one way to know. The seller will take control, and you'll have a ratio change in price.